Guys, this is the live markets right here. As you can see, this is GBP AUD, and guys, look at the manipulation happening here. First of all, we have these stops that were liquidated by this push through to the upside, and then the market started melting through to the downside. We left this double top right there, which I'm willing to see the market liquidate them before pushing through to the downside and liquidating this order block right here and this double bottom, for example, right there. We have inflation news in 1 day tomorrow on GBP AUD, so I'm loving this manipulation that is happening right here. As usual, I will let future Roy do all the explanations necessary for this video, but I just wanted to show you the trade before it's triggered in. Let's see how this goes. So on top of GBP AUD, I'm taking this Euro USD trade right here. Now, as you can see, this is the live markets right here, Euro USD, and I'm eyeing this liquidity right there. Look at this manipulation. We have stop losses below this double bottom. We have stop losses below this double bottom. We have these impulses through to the upside that left order blocks and imbalances that people are looking to buy as well, and place stop losses below here. So we have a huge liquidity right here through to the downside that I'm looking to see Euro USD push into. We have also this respect of this order block right here, so stop losses below here as well. Now, as usual, I will let future Roy do all the explanations. I just wanted to show you the trade before it being triggered in. Now, it is triggered in already, however, you know what I mean. Now, let's go. So on top of the Euro USD and GBP AUD trade, I'm also taking this Bitcoin trade. As you can see here, this is the live markets here, Bitcoin. And guys, look at the manipulation happening here. First of all, we have this trend line right here where people have bought, placed stop losses below here. We have this double bottom right here. We have this quadruple bottom right here where there's a lot of liquidity below it. And I expect the market to melt through into it, take out all the stop losses right here through to the downside after clearing out liquidity through to the upside above this high right here. So we'll see how it goes. I will let future Roy do all further explanations as usual, and we'll see how it goes.
Hello everyone, Future Roy here to explain to you what happened with those trades. I just finished working out and I thought to myself, why not film a video for you guys? So excuse me about the look, even though I look good all the times. But let's get right into the video. In this video, guys, I will be explaining to you how to exactly trade a change of character. That's the first thing. The second thing, when you should close an order that's not been hit. So if you open a sell or a buy limit and it isn't reached, when should you delete it? And the final thing that I want to be talking about is how to build a liquidity scheme. So let's get right into it. Now, before I speak about anything, I want to talk about biases. Why was I selling Euro USD and Bitcoin in the first place? And if you've been watching my old videos, you'd know my fundamental look on the market. However, if you haven't, first of all, come on. What kind of relationship is this? I thought we were friends. Now, if you haven't been watching my videos, then inflation news were higher than expected. It disappointed, which means that the Federal Reserve are more likely to raise interest rates, which means this gives the US dollar some more strength and causes all the opposite pairs to go through a little bit to the downside. Now, the interest rate decision is going to be in November too, and if that interest rate decision, they surprised us and they decided to lower interest rates or pivot, then this is going to cause a shift in the market, and the market finally will start pushing a little bit through to the upside, like euro, like gold, like Bitcoin. All those pairs will finally see some bullishness if that happens. Now, if that doesn't happen, and what most probably will happen, is that they will decide to raise interest rates, which will cause those pairs to melt even more. Now, let's talk about the results of those trades that I've opened. Let me share my screen here. So as you can see, first we have Euro USD. Euro USD pushed through to the downside, came back up, it liquidated this high as I was saved by my higher stop loss right here, and then it pushed through to the downside into my TP area. Now, Bitcoin, as you can see here, the market pushed through to the downside, then retraced a little bit through to the upside, tagged me in, continued into my stop loss just a little bit, and then melted through in my direction into my TP area right here. Now, when it comes to GBP AUD, as usual, I always have a trade that should do this. It simply continued through to the downside here and didn't tag me in. So let's talk about some explanations. Now guys, let me try to explain to you through Bitcoin how do you trade the change of character. What are the two criteria to look for when trading a change of character? Now first of all, the market is pushing through to the upside right here. It's forming higher highs and higher lows as it's pushing through to the upside and forming this trend line right here through to the downside. That is the latest structural higher low that was formed in this area. What you would be waiting for here is you would be waiting for that higher low to be broken through to the downside and then for the market to retrace for you to enter a trade. Now, there's a question you should always ask yourself. When do I delete that order? You've placed an order here, you're waiting for that change of character to happen. However, when do you delete that order? And this is very important, guys. If the market pushes through to the downside and grabs all the liquidity right here through to the downside, you don't want to be taking that change of character right here, as the market already satisfied its goal. The reason why you're selling is to grab all the liquidity through to the downside. If that goal is already satisfied, it means you have no reason to take that trade. So you want to delete that order if a change of character happens, grabs all the liquidity and is now coming back. This is not a retracement, this is a whole push through to the upside after grabbing the liquidity, and you shouldn't be trading in the opposite direction. Now let's say the market pushes through to the downside right here and forms liquidity instead of grabbing all the liquidity through to the downside. Now that is a valid trade, because now you're targeting liquidity through to the downside, and that could be a very profitable trade. Now that is the first criteria that you want to be looking for. The second criteria that you want to be looking for when trading a change of character is contemplating that high right here. And let me simply draw a double top right here through to the downside. Now guys, as that change of character happens, you want to look at that high right here and determine if that high grabbed liquidity with a previous double top or with a previous high, or did it form liquidity with a previous high or a previous double top, something like that. In that case, with my drawing, the market grabbed all the liquidity through to the upside. We had a triple top right there, and the market grabbed this liquidity, pushed through to the downside, broke this low, and is now, for example, going to retrace. And now this is a good entry because the high grabbed liquidity instead of forming liquidity. Now let's say, for example, that low, that high I mean, was formed right here, and then we had a break to the upside, formed a triple top right there, and then the market changed character. This is a bad trade to take because the market is forming liquidity through to the upside. And when the market forms liquidity somewhere, it means that eventually it will come back for it. So you don't want to be trading with these odds. You want to be trading when the liquidity to the upside is cleared out, liquidity through to the downside is formed, and now that is a valid trade to take through to the downside. Now let me go to my Bitcoin trade and show you this exact scenario. So right here, as you can see, the market was pushing through to the upside. We changed character right here. I looked at that high first, and as you can see, we grabbed the liquidity above that high. We didn't form a double top with it. We grabbed it and then pushed through to the downside. First requirement satisfied. Second requirement, that low right here, it formed liquidity with this trend line through to the upside, which makes it a valid trade that I took, and then the market pushed through to the downside into my TP area. And this is exactly what I'm talking about, guys. Now let me go to EURUSD and explain to you how do you draw a liquidity scheme. So one of the many questions that I receive, guys, is, Mr. Roy, you handsome motherfucker, how do you determine where you want to enter the market? And I'm going to answer that question right now. First of all, fundamentals. Okay, I've read fundamentals and I've decided that I'm bearish. I'm going to keep being bearish until November 2, until the interest rate decision is out, unless something surprising happens in the market. Now, on top of that, I want to find the exact area where I'm going to sell. So to do that, first of all, I start by drawing something called a liquidity scheme. So let's talk about what is a liquidity scheme. First of all, I have this chart right here, and I want to tell you why did I decide to sell EURUSD from this area right here through to the downside. So let's imagine that this move through to the upside still didn't happen, and analyze the liquidity scheme. Then, first of all, what I see is I see this quadruple top right here. Let me color it in red. Okay, and what I see is this double bottom, and this double bottom, and this trend line, and this order block right here. All right. So, right here we have a huge liquidity area. As you guys can see, we have double bottoms, we have trend lines, we have order blocks. Through to the upside, we have this quadruple top right here. Now guys, where the traders that traded this quadruple top right here, where would they place their stop losses? Above the latest high. So as I look at the market, I'll see they place their stop losses just above here. Now, those order block traders, where would they place their stop losses? Just below the order block, right here. Those double bottom traders will place their stop losses just below the double bottom, right here. Those trendline traders, the latest trendline traders, those are going to be the traders that you look at. The latest trendline traders are going to be placing their stop losses also, if you can see, let me zoom in a little bit on the trend line. As you can see, guys, that was the latest test of the trend line, and this is the latest low right here. So it coincides with the stop losses of this double bottom right here. Okay, so we have a huge liquidity area through to the downside, and we have kind of a strong liquidity area through to the upside. What I waited for the market to do is I waited for the market to just grab this liquidity area and then push through into this liquidity area right here. Now, what the problem is that most of you guys are trying to sell everywhere. So as the market is pushing through to the upside, trying to sell here, trying to sell here, trying to sell here, trying to sell here. I'm waiting patiently for one of the liquidity areas to be grabbed, and then my fundamentals say down, and I decided to sell from here. And as you can see on the 15 minutes time frame, what happened is we had the same change of character setup that I showed you on Bitcoin. The market was pushing through to the upside right here, formed a double top, grabbed it with this high, changed character right here, then push, retraced, and then pushed through to the downside. Were the liquidities grabbed by this low? No, because those are the liquidities right here. We have 1, 2, 3, 4 touches, we have a trend line, we have those touches as well. So we have major liquidity through to the downside that the market was supposed to push into. So I sold right here, got out almost right here. I don't care about the market, by the way, continuing all the way to your latest target. This is just greed. You want to take your trade, take your profits, move out, and don't care what happens. So right here, as you can see, what then happened in the markets, then push through to the, let me go to just real time. And as you can see, the market targeted this 2 lines that I drew right here, wicked through them, and then started pushing through to the upside. So this is, guys, how you draw a liquidity scheme, and you target the market from one liquidity area to the next liquidity area. Now, guys, for this GBP AUD trade, I was targeting this double bottom, this right here, triple bottom, whatever you want to call it, as you can see in the beginning of this video. However, I decided I no longer want to be part of this trade, and I removed my order that was opened right here, that was put right here, it wasn't triggered. So the reason why I decided I no longer want to be in this trade is because, guys, you have to analyze the price action that is happening right now. And what is happening right now is that the market is forming liquidity, grabbing it, then forming liquidity, then grabbing it. Right here, for example, we formed this 1, 2, 3, 4 touches, and we grabbed it. So we have the capability right now, the banks have the capability right now of fueling a position through to the downside and accumulating positions through to the downside, and then pushing the market through to the upside right here. Now, I'm not saying that this is what they're going to do. However, when I see them accumulate a position through to the downside and form double bottoms and take it, form double bottoms and take it, and do all this stuff, then I don't feel safe entering a position in the opposite direction as I see them accumulate a position through to the downside. So I don't want to be doing that, and this is why I'm leaving this trade, and this is one of the things that you should also pay attention to. Now, this is going to be the end of this video. Also, let me know if you've enjoyed it. DM me on Instagram, join my Discord and message me there, and let me know if you enjoy these videos. Like, subscribe, notification, all this stuff. And as usual, guys, good luck, and I'll see you in the next video.